Good morning, students. Let us continue with our sources of finance, importance of finance. Finance, what a simple word to speak, but we all know finance, capital, money. The whole world is around the word capital. So capital is going to decide how your business will perform, how your business will survive, how long your business is going to work. So capital, in the circumference of capital, in the rotation of capital, all our activities are based. So let us see how capital help us. The very first, with capital we can do the purchase of raw material. Without raw material, production not possible. When you have the raw material, that helps you to do the production. So production activity is required. If you have something, you can sell and you can earn something. When you do the production, you need to do the marketing. You are doing work. You have to inform people, and for informing also, every day on television you see the advertisement. Advertisement provoke and it excels the demand in market. They are creating more probability for the sale. So marketing can be done only if you have funds in your pocket. Maintenance of an activity. You have to run the business. You have to pay salary. You have to maintain the business houses. You have to run the activity by paying off electricity bill and so many other routine expenses. Without payment of salary, do you think people will work for you? Not possible. So maintenance of activity also done by the business. You require the credit worthiness in the business. Creditability of business. Timely payment to your creditors. Timely payment to your debenture holders. Timely payment to all the other parties to whom you have to pay. If you are unable to pay on time, there will be a rumor in the market that this business is in difficulty and then sudden collapse will come. With the payment of all the things, and when you are earning profit with all your economic activity properly done, you can give ROI, return over investment. Why all are buying the shares? Because they want a return in their investment. So return over investment, everybody looking for. So if you earn profit, you can give proper ROI. When you have something extra, even after payment of return, you have something extra, you can do the expansion of your business. So all these things possible only and only if you have capital in your hand, sufficient capital in your hand. Nana vagarno na thyo. If you don't have money, you have no value, no regards, no importance in the world. In our personal life also we feel this. Then this is related to business. You can understand that how capital is important. The second point which explains the importance is that it is like a human blood for body. As without body, human can't survive. Like that, without finance, business can't survive. So you need to have sufficient finance. The credit worthiness of business depends on this. A little rumor regarding not doing well or not having sufficient fund is enough to collapse your business. See, all the creditor will make a big line in front of your office for claiming their money. And when everybody come together, you will be having working capital problem, you will be having difficulty to pay them, and like that the effect will be there to your business and sufficient enough to collapse your business. The next is all business activity depends on it. We have already understood that everything, purchase, production, marketing, maintenance, everything, nothing possible without finance. So like this, finance is a very, very important aspect for business, and for every business, sufficient finance. We have understood how the total capital requirement to be counted. Elements of capital we have observed. So always have an optimum capital. Use the optimum capital. Your capital has to be utilized properly without wastage, and you have to be very serious regarding the financial management regarding capital. So this is what all about the importance. Now let us go to the next point. The first source of ownership, capital. In our earlier class we have observed the classification of capital. In that the first one was the ownership capital. In the ownership capital, the very first type of capital is equity share capital. Equity share. So let us understand what that equity share means. The shares having last right to get their dividend as well as to get their capital back against preference share. Two place where you are going to receive last. If company earn profit, out of that profit, first of all, the dividend will be given to preference shareholder. And then if whatever remain, that to be distributed among the equity shareholder. So you have the last right. You can't claim ahead of preference share. Secondly, you also can't get your capital back at time of a liquidation, winding up procedure of the company. If company need to be closed down, then after the payment to all, first of all the debenture holder, the borrowed capital to be refunded, then the preference share capital to be refunded, and then whatever remain will be distributed among the equity shareholder. So equity share means those shareholder having the last priority to get the dividend and to get the repayment of their finance. Now let us see the characteristics. Out of this, what character you can derive, how you can identify equity shares. Number one, they are the true owner. Equity shareholder are known as a real owner of the business. Why real owner? One, they have the voting right. Two, they are going to get the dividend based on the profit. There is no proper rate of dividend which is fixed. It varies from the year to year whatever profit is earned, and they will get their capital at the end. So in this manner, the true owner, the actual owner, they have the voting right. What it means? They have their voice in the management. They are going to attend the annual general meeting once in a year, compulsory to attend the meeting, and in that meeting resolution will be passed, and whatever the decision management want to take, they have to put that point in the annual meeting in front of all the equity shareholder. So in these terms you can say they are true owner. Number two, to prove them they are the owner, they have the voting right. The voting right that would decide that whom they want to run the company, whom they want to elect the director of the company. So here the voting right is the vote is the power to decide. In our annual country election also you have observed that how the voters have their voice in the election and how they change the elected parties from one to another. So voting right is a very big power. With that you can decide the management of the company. They have the right to get the dividend, but here the rate of dividend it varies. You may have more sometime when there is more profit. You may have less sometime when there is less profit, or you may have zero if there is a year in which no profit or it is difficult for company to distribute dividend. So the rate of dividend is not fixed, it varies from time to time. The dividend is based on profit. more profit, less profit, or not sufficient profit to give dividend at all. So it is based on profit. So dividend policy depends on what sort of a performance the company has done during the financial year. The annual general meeting, compulsory annual general meeting known as a AGM. Every company has to invite every shareholder to attend the annual general meeting in which they are going to decide about the policy matter related to upcoming financial year. Compulsory for all the owner to attend this, and if they are not personally attending, they will do the procedure of a proxy, and in that way also they have to give their voice about the decision what company going to take. Next is the repayment of capital. They will get the last priority. We have already observed here that they will get the last chance to get their capital back at time of liquidation. First, the borrowed capital to be paid, then the preference to be paid, and last, if at all something remain, you will get the repayment. If nothing is remain, then you may not get the any finance. Dissolution. When the liquidation took place of the company, dissolution means to wind up, to dissolve, to abolish, to close down. So at this procedure also, the equity shareholder will get the last priority. Next is that qualification shares. At time of incorporation of the company, the likely promoters and those who are going to be the director of the company, they have to qualify to become a director by purchasing the shares. The 25%, up to 25% of the company shares are to be necessarily acquired by the directors. So the directors, they have to purchase, and those shares which are purchased by the director to qualify themselves to become the director, known as a qualification shares. So the equity shares only counted for the qualification of directors to be the director. Next is that is the capital benefit. If company is growing, if company is doing very well, if the credit worthiness of the company is good, then the share price, you must have observed every day in the business channel, the share prices your parents must be observing. Your family members and other friends and relatives must be observing. What they are observing? You have purchased share at a 10 rupee, and today the price of the share is 650 rupees. It means that you have the plus 640 rupees. This is what your gain. This is what called a capital benefit you can get only in case of equity share. If the shares are listed in the market, if the management is performing very well, then definitely the share price will increase, and that benefit goes to the equity shareholder. Then registration of shares. It is compulsory for a company to get registration. Company will try to register their shares into the SEBI, Security Exchange Board of India, and in the stock market. But if company management fail to satisfy the norms of the company registration, in that case the management may try to get the registration, and sometimes they may even fail in getting the registration. Now if the registration of shares is done, then only in the stock market you will have the price of those shares, and then only you can get the benefit of that capital benefit. So registration of the shares is mandatory, good and advisable and helpful to the investor, and that's why the equity share registration has to be done. Now the next point, let us see, that is the types of equity share. Equity shares are also known as a ordinary share. The very popular type of equity share is the ordinary equity share. Ordinary means we say no, very common, normal. Every company has to have equity share as a total source of finance, as a one of the source of finance. Without equity share, ordinary share, company incorporation and company commencement procedure does not took place. So you have to have one aspect, one source of finance as a equity share, ordinary share. So the first is ordinary equity share, the second is that sweat equity share, and the third is that other equity share. So these are the basic three types of equity shares. Now let us see the first, ordinary equity share. What are the character? The very first character, it is compulsory for company to issue. Company may not issue preference share, okay. Company may not issue debentures, okay. Company may not go for public deposit, it will do. But without equity share, company cannot exist. So compulsory for you to issue equity share. The owner of the equity share, ordinary share, are true owner. We have already seen here, they are the true owner. They take the real risk. Why to be said real risk? Because the return, dividend is uncertain. They may have more dividend, less dividend or zero dividend. So, they take the real risk. Repayment of capital at last. They will be getting at last. If something remain, they will get. If nothing remain, they have to forget what investment is done by them. ₹10, forget it and give up forever. So repayment of capital at last. Here the ownership right. The ordinary equity shareholder have the ownership right in terms of voting. They are called as a real owner of the company. They are known as a shareholders of the company. So these all are the character of ordinary equity share. Now let us concentrate at sweat equity share. The sweat equity share means the shares which are given to the directors. The shares which are given to the special knowledge person, those who are working in the company and having a special skills, special abilities, and they possess and acquire a special treatment in the form of offering the equity share known as a sweat equity share. Now these shares may be even given to employees, not all, only those who are special, only those who are capable, only those who have dedicated their service to the company in a very special manner. So to them the equity shares are issued. Now this equity share may be issued at discount and without collecting cash. It is one kind of a gift. It is one kind of a token of gratitude. It is one kind of an appreciation given by the company to the employee in terms of shares. So there is no return. Cash is not collected and it is maybe issued at a discount. So only company want to issue the shares at discount, then sweat equity shares only can be issued as per the new Companies Act 2013. The last is other equity share. Now other equity share, in that the first character is that with voting right. The equity shareholders have the voting right. So voting right is their main character. The second are the rights in the dividend with a special condition. Normal dividend they do get, but some special conditions and terms are kept for getting dividend, as well as they have the voting right. So they are very near to the preference share sort, that they have some conditional return in the profit of the company. So in this manner, today we have covered the importance equity share, its characteristics and the types. Very important content from your exam point of view. Prepare the characteristics meaning question for 5 marks. Normally it comes for the 5 marks. And the types of equity share, maybe you have to prepare it for 2 marks. And the importance of finance also you have to prepare for 2 marks. In this manner, the theoretical question to be prepared from this content. Thank you.